Welcome to Algoways once again, and today I am going to discuss two algos on CDS segment, that is currency derivative segments, specifically on GBP INR and USD INR. Before going into strategies, I would like to discuss a few basic things about the contract of USD INR and GBP INR, the contract specification basically, and few other basic things so that everybody, even if he is a new deployer, he can understand the nitty-gritty of all the points in this trading. So let's start with very basic. Now in NSC we have four pairs of strategies running right now: GBP INR, USD INR, Euro INR, and JPY INR. But the most active contracts are GBP INR and USD INR, and we also will be focusing on these two instruments only. We are not doing any trading in Euro INR and JPY INR. Next point is time. The time of CDS segment is from 9 a.m. to 5 p.m. So basically it starts some 15 minutes ahead of NSC and trades 1.5 hours after NSC close. So we have enough length of market wherein the strategies can work around and do some profitable trades. Next is tick size. What is tick size? Basically, let me take an example from MCX. If you see a crude, if it is trading at say 7,000, so its tick size is 1. That means the minimum it can move to 7001 or 6999 from 7000. Similarly, the tick size in NSC is 0.05, and if we talk about CDS, the tick size is 25 paise, which is 0.0025 rupees. So for example, if you take an example of USD INR, if it is trading at 82.2025, it will be up to 4 decimal point always, because it is trading up to 25 paise listing as a tick. So from 82.2025 it can either go up to 82.2050, or if it goes down one tick, it will be at 82.20. So I hope the concept of tick is understood specifically in CDS. Expiry of CDS contracts. So basically, if you see for NSC, the expiry is always on the last Thursday of the month. All the NSC contracts expire on last Thursday of the month. Similarly, in MCX we have different expiries for different commodities. Crude will have expiry around 19th, 20th. NG will have around 25th or so. Copper will have on 31st or the 30th, depending upon what is the last day. And bullions will have expiry. They don't have expiry on every month. They will have expiry of around 5th, whenever they have expiry. Another point in CDS expiry is its time of expiry. Generally in NSC the expiry time is 3:30 p.m. on the last day of Thursday, last day of the month. The expiry happens at 3:30 p.m. when the market closes, but it is not the case in case of CDS. The expiry time is 12:30 instead of 5 p.m., which is closing time of CDS. This is very important to note, especially for traders who are doing it manually, and this happens with most of the people. Has happened with me also quite number of times, that we forget about that today is expiry and we take a position manually, say in the morning or through Algo as well. Then at 12:30, if we have not exited before 12:30, the current month prices will stop changing because the contract has matured. So the prices will be settled and there will be no more trading. And since your position is not exited, there is no damage as such in terms of PNL, but your margin will stay blocked till the end of the day. And at the end of the day, the contract will be settled with the settlement price, and your PNL will be credited or debited upon your account depending upon the profit or loss. But of course the disadvantage is that you cannot use that blocked margin for the day. So 12:30 p.m. is the expiry. Now coming to next is lot size. In NSE, one lot is 50 quantity. In crude oil, for example, it is 100, and in case of CDS, it is 1000. So one lot is 1000 quantity. So one lot is 1000. So if your trade moves by 1 tick, that is 25 paise on one lot, your PNL will move by 25 rupees. Sorry, 2.5 rupees, not 25 rupees on one lot, on 1 tick. Suppose you have a position of 30 lots. 30 lots means 30,000 quantity, and it moves by 1 tick. So 30,000 multiplied by 1 tick, which is 25 paise. So 75 rupees will be the movement in your PNL. Another thing, people who are trading through TradeTron, that in TradeTron the quantity shown is in quantity, in numbers, not in lots. Whereas in terminals, most of the brokers shows this in number of lots. So if your trade size is 30 lots, in your terminal it will show 30 lots, but in your TradeTron account it will show 30,000. So there is nothing to panic because both are the same things. Most important thing is margin. Margins of late have gone up. That is primarily because of drastic moves in GBP INR and so many reversal. So the margin has been increased. It is 4,000 rupees per lot in case of GBP INR and 2,000 rupees per lot in case of USD INR. So if any strategy is doing 10 lots and 20 lots, in fact one of our strategy is doing this quantity, so the margin will be total 80,000, 40-40 each. These margins have gone up 3 months back only. Earlier the margin used to be GBP INR as 2500 rupees and even USD INR was around 850 rupees. But it has gone up now. So these are few basic things about the CDS contracts. One should know all these things: market timings, the lot size, tick size, expiry time, lot size, margins, everything. And now let us move on to the two strategies of Algoways. In fact, we have 3 strategies, but one strategy we are not using as of now. The third strategy which we are not using, it is similar to the NG strategy in MCX, which is highly volatile and highly risky as of now. So let us give a pause to that now. So I will discuss the other 2 strategies. The first strategy is GBP INR and USD INR pair. What does it mean by pair? Pair trade is basically if one instrument is buy, other will be sold. So it works basically upon the relative strength of the 2 instruments. Finding this relative strength of the 2 instrument is the key edge in this strategy. I have a very good logic for finding the probable relative strength between the 2 going forward and try to encash that. So always it will be paired. It will be both the instrument GBP INR and USD INR in the trade, and of course one will be long, other will be short. So the margin requirement, as we just discussed on the previous page, is that it will be 80,000. But sometimes the brokers increase the margin randomly because of volatility. Plus we have to take care of the drawdowns and losses as well. So we need to keep a buffer of say 20,000. So let us keep a margin of 1 lakh. The second strategy is purely on USD INR, which is a directional strategy. So it trades in 20 lots of USD INR, and it is purely directional strategy, and it has the capability of coming out with even if there are 2 to 3 reversals. So if the reversals are not more than 2 or 3, then it can survive and give the profit. Let me share the results till now. I have deployed both the strategies on 21st October. So it's some 2 weeks now. So let me share the results till now. क्या रहा है result? So this is pair trading of GBP USD and GBP USD INR AW125. Of course, the margin requirement will be 1 lakh now, as I explained. So what it has done, it has given a profit of 3.3k in 6 trading days of October, because I deployed it on 21st October. And in the last 4 days, in the present 4 days of November, it has given 13.2k, which is quite high. Let us see the other one. The USD INR directional strategy is, it has given, the margin requirement will be 75,000 now. So it has given in 6 days 20.7k profit in October and 4k profit in 4 days of November. So if we one thing I would like to explain here, that don't go by the very attractive profit numbers before deploying. It will not always be so. Since GBP INR strategy has given some 14k or 15k, 13.2k in 4 days, it does not mean it will keep doing so. Okay, it will have its phase of drawdown, but at the end of the month, if we are able to make, say, some 10-15% of our deployed capital, it is good enough. But since already it is at 21% in November, so does not mean that it can go up to 100%. It can go higher from here, but we should not keep the expectation very high as it is seen in the numbers. We have to be very practical. There will be losses, and there should be losses, and the losses could be a stretch of losses. So we have to be very careful about that before deploying, and we should not take these numbers as a reference for deployment. Other thing is, I want to discuss that I have kept a target and stop loss of 1:1, which is 3,500 on both sides. So before deploying, one should be very clear that the deployment, if he deploys it can have a loss of 3,500 a day, and there can be 3 to 4, let us say 4 consecutive days losses, which means 14,000 rupees loss can happen as a DD, but at the end of the month we will be in green. So unless somebody is comfortable with this kind of streak of losses, he should understand this, and then only he should deploy. Other advantage in both the strategies that one can deploy even with 0.1x. That is, if 1 lakh is the margin for 1x, he can deploy even 0.1x. Let me show what does that mean. So if suppose we have this deployment of USD INR, so if you see here, this deployment is offline and it is at 1x, but we have the option here. Now see, it is taking at 1x at 75k as margin, but if we select 0.1x and then again this refresh this, now you can see here that the margin has come down to 7,500. So instead of 20 loads, now it will take only 2 loads. So one can basically deploy in 0.1x or 0.2x and test in live auto market, and then deploy at the desired number of multipliers as per the capital available. Alternately, I have given the live auto access code also in my Telegram channel. One can deploy in that live access auto code and can see how the strategy is performing before deploying it. There are 2-3 do's and don'ts. That one is that don't reactivate the strategy once it has exited on profit or loss on the first counter. I haven't tested the strategy yet on reactivation, plus I have not optimized the reactivation. Reactivation is not simply just go and reactivate. No, it is not so. There has to be a defined logic, and it has to be a very good logic to gain from by reactivating the strategy. So close don't reactivate as of now till we have that solution. Second point is that deployment should be done before 9 a.m. Strategy takes a trade based on previous day's some price movement and morning 1 hour price movement, and if you deploy that strategy say about 11 o'clock or 12 o'clock, so it may take a wrong trade altogether. So avoid deploying during the midday. It has to be deployed before market starts. Third point is that continuity of deployment should be maintained. What does that mean? That we shall not give a pause to strategy if there is 1 or 2 or 3 losing days. We have to be very clear in the start itself that if that suits us, then only we should deploy. Because generally what happens, people who stops or archive after 2-3 losses, they will start again after few days, and then unfortunately and invariably it will happen that it will again have the losses. So what happens with such people, that they keep taking the all the losing counters with open heart, and then when the time comes for profitable counters, their strategy is either archive states or in paused states. So please don't do it. Make a decision beforehand whether you can deploy or not, depending upon the risk appetite, and once deployed, let it run. Initial deployment can be done depending upon your capital or risk appetite at 0.1x or 0.2x also. So there should not be any panic pausing at all. Okay. So these are the few do's and don'ts. I think I have covered all the points about the strategy, all the basic points and the strategy specific points and do's and don'ts. Still, if there is any query, you can either ask in the comment section of this particular video, or you can second method is that it can be asked in the Telegram discussion group, or you can directly text me on this WhatsApp. I will be very happy to reply if there is any query. So that's it. I wish you all the best who wants to deploy the strategies on live auto, and I hope there will be a successful deployment and profitable month on month. So I wish good luck to all of the people who want to deploy. Before going, I will request each of you who is watching this video to share the video with your friends, your circle, your family, whom you feel that this can benefit and add value to their trading portfolio. Also, subscribe the channel and press the bell icon so that you get the notification of next video as soon as that happens. With this, I'll close this video. Thanks a lot. Thank you for your time.